Well, somehow it's already March in 2022, which means it's time to check in and see what's happening with the housing market, both nationally and locally here in Spokane. My name is Phil Wells. I'm a real estate agent that likes to keep up to date with the market, and I want you to be as informed as possible too. In this video, we're going to look at national pending home sales, we'll look at mortgage rates as well as mortgage application rates. We'll then look at some news articles that stood out to me for some good context on the overall market. At the end, we'll try piece all this information together and figure out what it means for you. So, let's get into it. Looking first at national pending home sales. Just a note on these figures, they are the latest figures that are available, but they detail pending home sales from January 2022. We obviously look at pending home sales rather than closed home sales because it actually takes a while to close a transaction. So closed sales in January would represent activity back from November, December time, whereas pending sales in January give us the most up-to-date impression of where the market's heading. Contract signings declined 5.7% month over month in January 2022. Year-over-year contract signings declined 9.5%, which represents 8 consecutive months of year-over-year declines. So we're starting the year off with more compression in an already heavily squeezed housing market. I continue to believe that any decline in sales we see lately is because you can't sell what you don't have, and inventory is tighter than it's ever been. I will touch on this a little later in the video when we look at news articles. Where I am in the western region, sales actually increased 1.5% in January, and they declined 9.7% from the prior year. Here's what the National Association of Realtors chief economist had to say about January. With inventory at an all-time low, buyers are still having a difficult time finding a home. Alongside persistent supply chain constraints, this economist said house hunters are contending with a number of additional market issues, including escalating home prices and rising interest rates. Rates jumped nearly 1 percentage point in January from December, further adding to monthly mortgage costs. He does offer some potentially good news on the horizon though. He says there's also the possibility that investors may flee towards safer US Treasury bonds, which may result in temporary short-term relief to interest rates. So not a very positive outlook there from this economist, and really who can blame him? There are a combination of market forces all converging right now to make home buying a very difficult process. We have interest rates going up, inflation through the roof, and inventory at an all-time low. But just remember this if you are a buyer. It's still possible there are still people buying homes and it's not all cash offers out there. If you're a buyer, please stick in there. Yes, you may have to lower your expectations, you may have to look at a less desirable home than you initially envisaged, and you may end up spending more on it than you initially expected. But buying a home is still a good idea and it will still make sense in the long run. And I'm not just saying this because it sounds good and it gets you to buy houses. I am personally looking at buying a primary residence home in the Spokane market. I understand the frustration and I'm going to be following my own advice. I'm going to be lowering my expectations, shoring up my cash position, and I expect it to take me multiple times to get there. If you're a seller right now and you don't have to buy on the other side of your transaction, maybe you own a second home or you inherited a home or you have a rental that you just want to get rid of, then you should seriously consider selling. You'll almost certainly get way more than you expected for it. If you are a seller who has to buy on the other side of the transaction, then likelihood is your sale will result in a good amount of cash for you, which should put you in a really strong position to buy. And if you do decide that you want to sell your Spokane home, then please consider me as your listing agent. I can be very competitive on rates. I firmly believe that in this market you don't need to pay premium commission rates just for someone to list your home, which is likely to sell like hotcakes. Let's move on to look at mortgage rates. Obviously, most people buying a home are using a mortgage, so to keep an eye on mortgage rates gives us a really good idea of what buyer demand is likely to do. Rates are getting a ton of attention right now, and we all know that they're heading up. So let's shed some light on the issue and see what's actually happening with rates. Sticking with January for a second, rates at the start of January were 3.29%, and by the end of January they'd risen to 3.68%. The most recent rates I could see have risen sharply to 4.22%. The Federal Reserve hasn't raised rates yet, so the fact that there's been an almost 1% rate increase in the last few months tells me the market is sensing some inherent risk in the US economy. All I know for sure is that rising interest rates only serve to further push aside those first-time buyers that are only just qualified to buy homes. So rates are up, that's undeniable. At this stage though, it's important to take stock and remember that buying a home is still a good idea, and in the long term, it will make sense. Remember too that you're also not stuck with that interest rate. Eventually, rates will come back down and you can refinance at that stage. Imagine you're a home buyer right now, and because of increased mortgage rates, you're forced to look at smaller or less desirable homes than you initially wanted. In a couple of years' time, you're able to refinance that home at or below 3%, and you may even be able to restructure that loan into a 15-year mortgage. This means you'll eliminate your monthly housing payments sooner, all because you sacrificed with a smaller or less desirable home in the short term. Sticking with mortgages for a second and looking at mortgage application rates. This is a huge leading indicator for the overall housing market because it doesn't matter what rates are if nobody's actually applying for a loan after all. We're no longer looking at January now. The MBA, or the Mortgage Bankers Association, publishes these figures weekly, so we're able to get a really good up-to-date impression of what the market's doing. So looking at the headline here, mortgage applications increase in latest MBA weekly survey sounds like a positive sign. The important part for us here is later on in that paragraph, mortgage activity also increased as prospective buyers acted on lower rates and the early start to the spring buying season. The average loan size remained close to record highs, with higher balance loan applications continuing to dominate growth. Earlier on in the article, we saw that purchase applications were actually up 11% from last week, which is a really strong showing. Headlines need context though, and a couple of weeks ago, mortgage applications hit a 2-year low. Regardless, it's still a positive sign to see strong growth, even if we're coming off a 2-year low. Obviously, mortgage applications only happen when you have a home to purchase, and we know from pending home sales figures that fewer transactions are taking place, but it's good to see people are still buying with a mortgage, and cash isn't just ruling supreme in every single case. I remain confident that increasing interest rates will not dampen the market too much, but will instead cause appreciation to slow down and appreciate closer to historical levels of around 2 to 3% a year. If you're a buyer right now, you will have to be more aggressive than previous generations have been. You'll also need to have more cash on hand than your lender says you need in order to buy a home. But you can still get on the housing ladder, you can still move up the housing ladder, and ultimately buying a home is still a good decision. Moving on to look at my local market, Spokane. Actual sales were down a whopping 21%. As I always say though, a decline in sales means one of two things. One, there's fewer homes to buy, and two, nobody wants to buy a home. And we can see later on in this report that new listings are down from where they were this time last year, and while inventory is up, it's up from a 9-day supply this time last year to a still woefully low 21-day supply this year. Just for reference, a normal market would look more like a 3 to 6 month supply. Median home prices continue to move upwards rapidly, with median home prices breaking through the 400,000 barrier for the first time ever, pointing to continued strong buyer demand here in Spokane. It's worth recalling that projections from Realtor.com place Spokane as the 3rd hottest real estate market in the United States for 2022, and anecdotally, I wanted to give you some insight into what buyer demand in Spokane is doing. I am personally working with clients that are bidding 15% over asking, with substantial appraisal gap provisions that are still losing offers. I'm also working with buyers that are waiving inspections and still losing offers. To say buyer demand is strong in Spokane is not a strong enough word. Buyer demand here is on fire. If you're a homeowner right now, you have a strong equity position, given how much home prices have increased over the last few years. And if you're considering selling, you have an incredible window of opportunity to do so. And if you do decide to list, as I mentioned earlier, I'd love to help you out in a way that keeps more of that equity in your pocket. If you're a buyer right now, it's rough. I'm right there with you. As I explained, I'm looking for a house myself. But it's still possible to get there, and buying a home still makes a lot of sense. Now let's move on to look at some news articles that have stood out to me this last month. The reason that I do this, if you're new to this channel, is because numbers don't paint the whole story. Sometimes you need a little bit of context to figure out what's going on in the market, and these articles are a great way of providing that context. The first article I wanted to touch on is the one that everybody's already read because it was so widely publicized here in Spokane, and it comes courtesy of the New York Times. I'm not going to read this article verbatim, but this article highlights what I've been saying for a while now, that eventually appreciation is going to fall out of sync with incomes, and it's going to price out a large percentage of the population. As a city, Spokane really doesn't have high incomes, as there are no major employers here providing a large number of highly paid jobs. There are a ton of people working remotely here in Spokane that make a great living, and there are high-paying professional jobs here in Spokane too. But when it comes to median incomes versus median homes, yes, homes are becoming unaffordable in this area. In this article, they interview the mayor, Nadine Woodward, and she again re-emphasised the need for higher density housing to help solve the housing shortage. She mentioned this initially during her housing crisis proclamation last year. People want to be here because it's a great place to live, and that's great, but we need homes for people to live in. As I drive around the city, I see new construction absolutely everywhere, so it's clear that builders have got this message, and I'm confident that eventually demand in Spokane will match supply, and people at the median will be able to get into homes once more. Next, I wanted to talk about the current inventory situation, as I said I would do earlier in the video. This graph shows you what's happening to inventory in the US as a whole. You can see inventory begin to decline in 2020 and the trend continue into 2021. With the first 2 months of 2022 on record, this year doesn't seem to be breaking that trend at all. If I were a home builder right now, I'd be churning out new homes because Lord knows we need the inventory. I know there are still some supply chain issues to contend with, and I know this isn't always possible. Looking now at the next article. If you're a regular to my market updates, you'll know that I've been trying to understand why there's low inventory for a while now. And my current working theory is that low interest rates at the start of the pandemic caused people to refinance and get financially ahead at that time. This, in my view, has and continues to disincentivize people to sell their homes because they will have to sell into a market where they'll likely have to overpay for the property that they end up buying, they'll end up with a higher mortgage rate, and they'll face an ordeal while doing it. Well, this article addresses this point in a survey to homeowners. In a recent survey we conducted, more than 1 in 4 potential sellers who were choosing not to sell in the near term said it was because they couldn't find a home they wanted in their price range. With housing costs rising, as home prices and mortgage rates both increase, affordability is more important than ever to households. Data suggests that this may be as true for sellers, many of whom will also purchase a new home, as it is for home buyers. So homeowners may have a ton of equity, but they're not actually that much better off than they were before the pandemic-fueled appreciation surge. Ultimately, if a seller is buying on the other side of the transaction, they're just trading one inflated asset for another and picking up a higher interest rate in the process. In most cases, honestly, they're better off staying put. And in my opinion, that right there is the cause of the housing issue that we're facing right now. So the market has been insane, it continues to be insane, and you might be thinking that we're approaching something like a 2008 bubble that's about to burst. I've been feeling this too, but because I'm so close to the market and I see how strong buyer demand is, I don't believe a rapid downturn in the market is possible unless buyer demand completely wanes or so much inventory comes online all at once that prices plummet. Here's an article suggesting that despite the headwinds, we are not in a bubble. I'll of course leave a link to this article in the description to this video, and I'll cover these pretty quickly. Homes are more affordable today than in 2007. This table references the fact that principal and interest payments as a percentage of income are actually lower now than they were in 2007. This next table shows that lending standards are tighter than they were before the housing market crash of 2008. This table shows the volume of loans to those with credit scores below 620. This next table shows the differences in foreclosure rates. And this next table shows how tight inventory is, and as I explained, when supply is this tight and demand is this high, it's almost impossible to envisage the market dropping rapidly. Lastly, I wanted to talk about creative finance options and cash buyers. The National Association of Realtors published this article, Understanding Changes in Financing Options. The article touches on a lot of issues, and I'll let you read this article yourself, but the gist of it is that traditional mortgages just aren't cutting it right now. People are finding more often than not that they need extra cash to accompany their traditional mortgage in order to be competitive, or they need to figure out how to be a cash buyer. I've recently heard of companies that offer to buy the home you want to buy in cash on your behalf and then sell it back to you. I've heard of people tapping their current home's equity by way of a HELOC in order to buy their new home in cash and then sell the old home to close out the HELOC. I've also heard of parents tapping their home equity by way of a HELOC in order to buy their children a home. I'm even working with someone right now that's tapping into their Roth IRA that has risen rapidly over the last few years. In order to buy a home for cash, they'll then be holding the property in that IRA. In a market where cash is king, you may find that these options are beneficial to you, and they may not be something you considered before. Now, let's try and piece all that information together and summarize the market as we see it right now in March 2022. We continue to see that compression in the market as pending home sales are down month on month and year over year, as well as inventory being at historic lows. Mortgage rates are back up to where they were in 2019, around 4%, and mortgage applications were at 2-year lows only a few weeks ago. Sales are down substantially here in Spokane. Home prices are up and inventory is still woefully low. It's a seller's market in the purest sense of the term. It's extremely competitive out there for buyers, and it's frankly unpleasant for most. People who would have been considered really well qualified buyers 5 years ago are now finding themselves in a position where they can barely afford to buy a home, which has a knock-on effect as those that are only just qualified to buy homes get pushed out the market. But just remember this one thing: in 20 years' time, you'll be wishing you could buy a home at current prices. So don't give up, it's worth it in the long run, trust me on this one. That's it for this video. I hope you gained from this video. If you did, please like and subscribe, that really does help me out. If you are looking at listing your home for sale here in Spokane, remember what I said before, I can be extremely competitive on rates, so please allow me to compete for your listing. And if you're looking at buying a home here in Spokane, I'd be honored to work with you. Just give me a call, shoot me a text, or send me an email to start the process. Like I said, my name is Phil Wells, and thank you for watching.